Welcome back. Good morning. And that was your weekend. Yeah, welcome to today's trading analysis and trade ideas and signal. We'll be starting from where we left off in our last episode. So I haven't been trading since then. And the only idea I dropped the last time is all right, capitalize on. So I don't want to be taking any trades without carrying you guys along. So we'll be starting from daily today. And today being Monday, we like to take our analysis from what we are expecting. We take our analysis for the week and we try and see what is left for the month and what we can capitalize on today. But today being Monday, we are expecting some manipulation into the week. So we'll be analyzing that. But before we jump into that, we'll be considering what we did last, where our trade stopped, and we'll try and try to see what it did from our previous analysis. So starting from 4 hour, yeah, the last analysis I dropped, the last episode I dropped analysis for this particular trade here, and I talked about how markets might not probably come back here to react. And when I started this particular level here, I quickly pick 1, 2, 3 and the trade materialize. And as we can see, we take this the liquidity above this level was taken, and it give us a reversal into the previous impulsive move that we. But if you remember, I talked about this particular leg here in the last two episodes. I was expecting some liquidity below this low into giving us some kind of manipulation into this particular level below this particular leg that we have here, as it is a very major liquidity to be taken on monthly, and it has been taken here. But the leg that it's created from the imbalance that we have on monthly give birth to this leg. But I was actually expecting after taking this liquidity, I mean after breaking this high here, I was expecting some kind of reaction into this particular level that we have here for the price to go higher. Well, when it happened this way, we kind of like hold on to that level to kind of see, because it's normal something that the market should do, especially Euro USD. And I told you, I said in one of my videos that okay, we are in a phase that Euro USD might not be giving us some kind of mitigation that we expect from our level of interest. So, but as we may have it, the impulsive leg that it was created, I was surprised for it to come back into the level to come and recalibrate and kind of mitigate these left out levels. And luckily for me, I didn't cancel my order that I left there. So, but what I did was, my trade is always 1, 2, 3, but on this particular day, I increased it to 1, 2, 8 because I was actually expecting this level. I guess I did that when the market was here, and we are yet to create at this level. So I just left it there because I didn't even have much time in the market to be analyzing. And as you can see, I didn't take away all the annotations that I had from my previous videos, episode. So since we are in this level, I just increased um my take profit into this level 1, 2, 8, 1, 2, 9. So I was surprised last week Monday to come into the market and found out that okay, we've already tapped into the level. And luckily for me, I made the market again and 1, 2, 8. So it was something that I wasn't even expecting. So I just closed the trade. As we can see, if you watch my previous episode, you will see how I explained all these levels even before these candles were printed here. Talked about how I'm expecting all this level to be rated. And here has been my major strong. Yeah. And I'm expecting that it's just a temporary one for the execution. I mean, for for us to just take charges of this range that we select here. So, but as we have it, the price later come into mitigating our level that we picked some months, I think second week of January. And I was surprised. So I was surprised, and I wasn't even surprised because I believe Euro USD is in the face of not quite mitigating, giving us a proper mitigation of some levels. But the markets eventually create this kind of gap to give us this mitigation. And that's the reason why it's not good to always run after price. So, and luckily for me, I was able to catch the pips from here to this level. And that's the reason why I like my strategy, set and forget. Anything can happen. I like limit order. I don't like running after price because it brings a lot of frustration and mess up your psychology, and you won't be able to properly articulate your risk management rules. So I prefer this. But starting from today, by God's grace, our analysis will be frequent and our trading will be frequent as well. So it's going to help us and we're going to make the market together by God's grace. So moving forward, that's what I want to talk about from our previous episodes. So moving forward now with what the market is doing, we kind of like us to do our analysis again, erase everything that we have and try to pick our analysis from up to bottom again and try to analyze what we are seeing here. And as we can see, market is somewhere in a range in this level, but there are a lot of things we can capitalize on within that range because that's higher time frame something. So coming to monthly, so you can see here, this particular level is a range, but we have some imbalance here that market is actually reacting from. So we still have some levels here, which is an internal structure that we are, but this is monthly. As we can see, we have some imbalance here that market might want to kind of like, okay, this level was broken. We have to do a big structural analysis from this particular level. That's that's a major shift in markets, and can call it flip, major flip somehow. At the same time, this will be a major strong low. So, but here will be a major strong guy. So major strong low. Then here will be a major strong guy. So that we are expecting. Then if this particular strong low is being protected, then automatically this will be a weak high. But within this level, we have some kind of imbalance here that market is currently trading within and is reacting from these particular levels that we have here. So let's put it here. And this will be our imbalance. So let's use fair value gap for it because we are monthly and that particular level is more than 100 pips if we are to measure it. So but as it is, this is what we have on monthly, and this fair value gap is what is kind of giving us all these reactions. But from what we are seeing here, we can see that okay, on 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 daily, weekly, on daily to be specific, we are in consolidation. So let's take that off. But that's for monthly, and how can we cap? This is our daily range here now for monthly. Let's go to weekly and see what we can capitalize on. And if we check monthly very well, we'll see that okay, our trade is messed up. If you are going to be using the open high low close strategy on making the candle, is already messed up, and we have only 11 days, 15 hours for the monthly candle to close. So before we can be pulling that on the market, we'll be anticipating the candle close of this one. So until it closes, then we will know monthly direction. But don't forget, we are in the first quarter of the year. So anything can happen. And so looking at this particular legs here, what the market is doing from this particular level, if we are to analyze it on weekly, you can see that okay, this particular leg was taken out. This is the leg that first entered into the fair value gap, and we can take that as our turtle soup, or just a weak low that was converted and that was taken out, and it was closed. It was closed. So we have the leg and the range is still fully functional. So this will be our lower low, and here will be our strong guy, which is our lower. So let's see. It's a stronger lower high, and here is their weekly until this particular link, this major lower high. If this stronger is being taken out of the market, then we can consider that the market has already shifted gear into going higher. But from what we are seeing here, as we can see with the candle that the market is printing, that weak, I mean that strong high is it can be taken out at any moment with the kind of level, the kind of way the market is printing its candle. So with the way the price is moving, so we have this stronger, and this will be our potential weak low. So which will be our lower low. But at the same time, what we'll be expecting from the market is kind of like these are dealing range. These are dealing range. And if this happens to be our dealing range, we'll be expecting what is it called? Uh, Still be expecting to capitalize from this particular level here. So for us to capitalize on this level, what do we do? Uh, Go on a lower time frame. And moving on to daily, as we have it here. We have it, we are still within this particular leg, which is our range, our dealing range. And from what we are seeing here, we are having some kind of reactions. But if we are going to try and analyze it based on minor structure level, minor structure to daily, both weekly and monthly, as we are on daily, you can see that this particular leg wasn't closed below, and this is the leg that break this weak low that we have here on weekly. But the second leg that's supposed to close below this low wasn't, so we can easily tag this as our turtle soup, which is uh, major turtle soup, and here has our break off. Then we have a flip on this particular level here. So that happens to be our flip, and that will be our major flip. And if we have this flip here, then automatically here becomes our strong blow. Here becomes our strong blow on a minor level to daily. So automatically it becomes our strong blow, and here becomes our weak high. So which we are still expecting market to break. As you can see, we are moving from monthly, these are weekly structure, and as you can see, this week low was being taken, and we are within this fair value gap, and the market is reacting from the fair value gap. And as we have a lot of spaces here that we are anticipating the markets to just read. And these are week high on monthly. As we can see, monthly and daily are aligning now. But on weekly, we still have this strong high that we are expecting to send price lower. But from the reaction and what we are seeing here on daily, we can be anticipating higher price in the market. So we are anticipating higher price in the market from what we are seeing here. So let's further analyze our our daily. And as you can see, the analysis we are doing today is a general analysis, as we are picking from monthly, weekly, and daily. And our monthly can, as it's doing, can set the tone for the whole year, as we are in February, the second month in the first quarter. So anything can happen. We have all this level to be filled on monthly. So anything can happen in the market. And weekly strong high on still send price lower from this particular level. Anything, we should anticipate anything. That's the reason why your risk management has to be strong in the market. So continue on our daily. As you can see, we have this particular level here. Here turns to our strong low on our daily. And we have this as our weak high. and we have a major flip here. But what we have here again has given us uh, a kind of reaction and reversal on the market is this major shift that we have here, major MSS. And if we have a major MSS, then automatically we can anticipate that this particular level will be taken out of the market. And this within this pin bar that we have here, we have some level here on 1 hour that we capitalized on previously, and market did come back to give us some kind of reaction into it. So this particular leg can easily be eliminated with what the price does this leg. So we can shift our focus from this range to this range, but we still hold this as our weaker because this particular leg is still within this level. But if we are shifting away from this particular leg to this leg here, then automatically we can say that, okay, this becomes our stronger, strong low, and here becomes our flip. Since we have MSS here, then automatically this is the leg that send the price lower. And if we have this leg sending price lower and we have some kind of reaction in the market, it here becomes it's having a double something here, but automatically we can still permit our either it's going to be what is it called? MSS in the market, a shift. And if we have a shift, we are anticipating that we're going to have if we have a shift in the market, we are expecting that we're going to have a trend change and structure break. So then if we have a turtle soup, we are expecting flip, then we are expecting our breaker block to be tapped. So since we have this major MSS in the market, we are expecting trend change, which is this particular level, and the leg that bring the trend change create another leg here, another high here. So we can automatically say that, okay, this particular leg here, this one that sponsored this particular one, this is the leg that sponsor it down. We're anticipating that here will be taken out. But from the reaction that we have here, we can eliminate this leg and concentrate on this leg. So this eye can send price lower, this eye that send price lower has given us another shift. So we have another shift in the market, which is this particular shift here. So our major shift, then automatically we can tag this as our trend change. So it's going to be a structure break. So we have this leg, this major MSS market structure shift that we have this particular leg because this leg that is coming down supposed to break below this particular one is our weekly low here on weekly. But as we have it, the price sent it back up. And because of the imbalance that we have here, liquidity gap that we have here, then automatically we have to be shifting our analysis from this particular leg to this leg here, and as we can have it here, this leg again supposed to break below this one, then it didn't break below it. Then we have another major market structure shift. So this leg that's supposed to sponsor this one to break this low has been transcended again. Then we have this our mitigation, our major trend change on this level. Don't forget we are on daily and anything can happen within the market. So what we have here now, this will automatically become, and don't forget we are in general what is it called, consolidation market. So if it is a consolidating market and we are for this level, but don't forget it's a major consolidating market. If we have to go on lower time frame, then it is going to be a trendy market. So as we have it on this particular level here, if we are to be analyzing this leg that we have here, then automatically we are taking all our attention for us to look for what to capitalize on. We are taking all our attention away from everything in the past and shifting to the right side of the market. Let's identify what we have and then here becomes our strong low, and here becomes our weak high. So here will be our daily range now. our daily range will be from this particular level. So we are not concerned, nothing concerns us with everything that has been happening in the past. So we'll only be dealing from this range, yeah, to this particular range, yeah. So what we need to do now is here becomes our week high that we are expecting market to trade. And if we are going on the lower time frame, this should be our daily range. So as we have here, let's identify what we have on daily. We have this particular other block here, which is our PD. So and is slightly above our 50% of this daily range. So if we have that particular level and with what market is doing, we can anticipate that okay, here becomes here can be our mitigation block. And as we can see, we will try and study that on lower time frame. We have little liquidity gap, fair value gap here. So FVG, yeah. So here can be a mitigation block and it's aligning perfectly with our fair value gap, and the manipulation can be done below this particular something here. So let's still try and do some certain things. Here is our previous daily high. So if it's our previous daily high, then here becomes our previous daily low. So we combine everything together, at least for today, Monday. So maybe we can still see something, and as we are having an inside bar already, as it's still within this previous something. So if we're going to have it, it's going to be like this is our close open, and we have a little gap there. So previous daily close open, and that means we have some kind of imbalance when the market opened this morning. So we have this fair value gap on daily below this particular level. And if we have to check properly, we still have some kind of internal structure here. So which can be holding price somehow. So but let's just kind of like we'll study that on lower time frame and see if our mitigation block, here wants to be our mitigation block, and it might have been tended to on lower time frame. So let's go to 4 hour to see more of see our internal structure has been acted upon, and we have another internal structure that has been created. So if at all we're going to be having anything at all, I'm going to be depending on any market within this level is going to kind of be below this internal structure that we have here, because this internal structure has been acted on. The little something that we have here has been acted on. And this particular level too on Thursday, last week Thursday, as it was somehow. So we have this internal structure here, this particular level, this internal structure which invalidates this goes below this particular level, and the internal structure, I mean the other block that we have here has been properly mitigated, it has been acted upon. And this is the only level, this proportion block that we have here that traded into this other block. This one is other block B. So only this level, these are daily fair value gap. As we can see, there is proper mitigation of that level. So if I'm going to be taking any trades from all this level here, I'm going to be taking trades below the previous day low, Friday below Friday low. Because as we can have it, we have this little, very little imbalance here from this particular leg to this particular leg, and which has not been properly mitigated. As we can see, our previous our mitigation block here, which is strength structure break, has not been fully attended to. So what we're going to have is very simple. We can try and go to um, 1 hour to see if we have anything to act upon. We have this particular leg here. Okay. So which serve as something this one here can be the one that will send the price up. So then definitely we're going to have a double trade from that particular level. But we have to check weekly. Okay. And we check weekly. Okay. We're expecting some kind of tunnel structure to be created because okay, cannot just pick without leg. So we can be expecting and anticipating this internal structure to be attended to, or we have some kind of proper mitigation from this level. So this internal structure that we have here, so it's kind of have some levels in it. So if at all, if I'm going to be taking this 1 hour something, I'll be taking trace from this particular level here. So here will be my long. So it's 18 pips. So make it 20 pips and having this as 60 pips. Just multiply 1, 2, 3. As we can have market reaction from that particular level. So it's already trading within that link. And if I thought if I'm going to be having any other trades, it's going to be below. If this level got invalidated, then automatically here becomes my trade and that trade level that I'm going to have. So it's just going to be, and I'm going to let it be here. So I'm just going to be taking that loop, which will also be 20 pips. So there will be our 60 pips. And that's normal 1, 2, 3. And as we can have it, here we can kind of like expect it to even go higher than that. But at least one clarity in my trade. So this one is okay. And proper 1, 2, 3. These are weaker that we're expecting. If you like, you can take this particular trades into this level, but anything can happen within the market. So, but I'm okay with this 1, 2, 3. So that will be my trade idea for today on euro. So on euro, let's go to go. But before we do that, I would like to quickly pick my trades. So I'm using just it's going to be 50. That will be euro and 15, then I'll be buying. So that will be my trade on euro. So just leave it there first. And let's go to good and try to see what we can capitalize on. Daily first, as you can see. No. Yes, good. As you can see from this particular link, I talked about this level to be my dealing range and this strong guy to be my level of invalidation for the trades that I took from these levels that we have here. So, and as we can have it, the level got invalidated, then we continue to trade higher. Then go to continue to trade higher and higher and higher. So this level near that I picked out of the analysis, but we didn't act upon, happens to be the one that give us all these reactions that we're expecting in the market. Because I wasn't in the market, we were unable to capitalize on all these levels that we have here. So what we're just going to do is to erase all the annotations that we have and try to pick our analysis again. Let's start from monthly. Let's try and see what we have here. So is our monthly is good, is very, very straightforward and less stressful. So that happens to be our previous week high, and here happens to be our strong low, and very, very straightforward, strong low, and here happens to be a strong, weak high that we're expecting markets to. But anyway, the impulsive leg is still being created, so nothing more to except until we have a reversal and we want to mitigate, give us a proper mitigation into where the price is coming from. So our weak high will continue to change until we have a proper reversal of the market. So as you can see on weekly, it's very, 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 very clear. Very clear. And the only place I see directly without any stress is this particular level that we have here. So here happens to be our mitigation block. So without much hassle, and as we can see, market has already acted from this level to this level. And we have these internal structures that we can be anticipating that market will kind of give us reversal into. So that will be the level that I'm going to be anticipating. So this happens to be my internal structure, and this internal structure has been properly mitigated except this particular one. But if we are to check on what is it called, on a lower time frame, we're going to see that okay, that particular link might have been acted upon. So we have little imbalance there, which is just a little fair value gap. We can try and examine that on lower time frame to see what it has done. And as we can see, the liquidity below this low has been taken. So if we do our proper analysis, the fair value gap that we have there has been acted upon. So all these things that we have doesn't really count. The only place that counts to me now is this particular level. And we are kind of having a shift in the market. So if this level now on daily, I'm expecting this particular level to be the one to send price even into higher something, but we have this level and it has been acted upon. And this is the low we are be expecting. But what we are having here now is kind of shift, as a little shift in the market, and that should have been a major shift, major reversals in the market. And that's kind of reversal pattern that we're anticipating. And here is a potential structure break. It's a potential one because it's yet to have major structure break. So if we have this level being broken, then we can be looking for some. Then we can take a little buy from this particular level that we have here. Let's see so as you can see, this is a shift. We have a shift here because this particular level is supposed to take this level out, and we didn't have that. So we have this level being acted upon, and we have it has already been acted upon, so we can be anticipating. But before I'll be taking any, this one too is a structure break on a minor level, so both daily, weekly, and monthly. So I'll be anticipating since this place has been broken like this, we can be expecting some sell from this level that we have here. Can be expecting some sell from that level here, but that will take this reclaim that block away. So personally, here should be our what is it called? This particular level should be the level that we send the price lower. So that level should be the price, should be the level that we send the price lower. So if I'm going to be taking any trades into this particular level here, so I'm expecting this low to be taken here. And here happens to be our internal structure higher time frame. So I'm expecting some kind of reaction from this level that we have here into center price. So if I'm going to be taking any trades, I can be risking some uh, little sell from here to this particular level here. I'll be taking it 1, 2, 3. So this is a risk anyway. And I like to make it 23. Just get out there. That's okay. And if we have, that will be 69,000. That's 1, 2, 3. So I'll be taking this trade into center price lower because we have a major MSS here. Now we are anticipating trend change from this level, which we are expecting this structure to be broken. And this particular level too has been broken within the leg that we are anticipating. So we're expecting this particular leg to send price higher. And if price has to go above this particular level here, then automatically we know that it has been validated. But I'm expecting price to come to this lower here. So you see the level that I highlighted on weekly, and as you can see that it has been properly mitigated on 4 hour. So what we're going to work, I'm going to be doing personally is taking trades from this level. It's going to be a risky market, but nonetheless, I can't allow what happened here. The way I missed out on taking my trades from this level to happen again. So everything is a risk. I'm just going to be accepting the risk ahead. So what's going to happen on this particular level is taking long from here. It's going to be a very big range something, but I don't care. So for 45,000, and that would be giving us 135,000 stock pips. So I don't care, even if it is 0.01, that's our proper 1, 2, 3. And I'll be anticipating that in the market. That's good. My good is always a long contract. So that's how it's going to be. Yes. That would be my trade code. Very simple. It doesn't take time like Euro USD that I will spend a lot of time on. So this will be my trade going forward on, but I'll be analyzing based on this. Thank you very much. Thank you for your time. I hope you do enjoy your trading week and have a profitable week. Thank you.